Want to know the best ETFs for beginners? If you're stepping into the world of investing, you might feel overwhelmed. But don't worry. Today, we're breaking down everything you need to know about ETFs or exchange-traded funds and highlighting some great options to kickstart your investment journey. First off, let's clarify what an ETF is. Imagine a basket filled with different stocks, bonds, or other assets, all packaged together for you to buy in one easy transaction. This is an ETF. It allows you to diversify your investments without needing to pick individual stocks, which can be risky and time-consuming. Now, why should beginners consider ETFs? For starters, they're generally lower in cost than mutual funds. You can invest in them just like stocks on the stock exchange, making them accessible for everyone. Plus, they often have lower fees, which means more money stays in your pocket. So, what makes a great beginner ETF? Here are a few key factors to consider. Look for ETFs that provide exposure to a broad market. This spreads out your risk. For example, an S&P 500 ETF gives you a slice of 500 of the largest companies in the US. Imagine owning a tiny piece of Apple, Microsoft, and Amazon, all in one go. Fees can eat away at your returns over time. Aim for ETFs with low expense ratios. Under 0.2% is a good target. This means more of your money is working for you instead of lining someone else's pockets. Choose ETFs that are traded frequently. High liquidity means you can buy and sell easily without affecting the price too much. Popular ETFs, like those tracking the S&P 500, tend to be highly liquid. Now, let's dive into some specific ETFs that are great for beginners. Vanguard Total Stock Market ETF. VTI, this fund offers exposure to the entire U.S. stock market. It's like a buffet where you get a taste of small, medium, and large companies all at once. Plus, it has a low expense ratio of just 0.03%. iShares Core S&P 500 ETF. IVV, if you want to focus on the biggest players in the game, IVV is a solid choice. It tracks the S&P 500 and has an expense ratio of 0.03% as well. Imagine the potential growth from the giants like Google and Facebook. Schwab US Broad Market ETF. SCHB, this ETF provides exposure to the entire US market, similar to VTI, but with a slightly different structure. It also boasts a low expense ratio of 0.03%. It's like having a VIP ticket to the whole concert of American businesses. SPDR S&P 500 ETF Trust. SPY, one of the oldest and most popular ETFs. SPY has a long track record. It's very liquid and easy to trade, making it a favorite among both beginners and pros. Its expense ratio is 0.09%, which is still quite low. Vanguard FTSE Developed Markets ETF. VA, want to dip your toes into international waters? VA offers exposure to large and mid-sized companies in developed markets outside of North America. It's a smart way to diversify globally with an expense ratio of just 0.05%. Now, you might be wondering how much to invest in these ETFs. A common rule of thumb is to start with an amount you're comfortable with, perhaps $100, $500, or even $1,000. Remember, investing is a marathon, not a sprint. It's all about growing your wealth over time. Let's talk about some emotional considerations here. Investing can be nerve-wracking, especially when the market swings up and down. It's crucial to have a long-term perspective. If you can ride out the bumps, you're more likely to see your investments grow. Think of it as planting a tree. Initially, it may not look like much, but with time, it can grow into something magnificent. So, to recap, look for ETFs that provide diversification, have low expense ratios, and are liquid. Consider starting with options like Vanguard's Total Stock Market ETF or iShares Core S&P 500 ETF. And always remember, invest with a long-term mindset to truly reap the benefits. Now, I want to hear from you. Are you considering jumping into the world of ETFs? Which one catches your eye? Drop a comment below and let us know. And don't forget to tune in next time, where we'll be covering a hidden gem in the investment world that could reshape your financial future. You won't want to miss it.